So this is our Friday edition for those of us, for those of you who follow us. Subscribe and like if you want more continued content. We're still getting this off the ground, but people are seeming to like our prediction. We had said that if 55.31 held and we went under and then bounced up, that's what you call a failed breakdown, that we would head higher. Really, we need 56.37, which is the white line that you see right above where the red line is. So 55.31 held, 56.37. We're just ping-ponging. That has to become support to get any sustainable bounce to come all the way back up to all-time highs. If we break out 56.37, that's a great sign. That takes us to 57.27, 58.33, so on and so forth. I believe we're probably going to hit our head on 59.29. And then we're going to roll over. The daily is still bearish, but we're oversold. What does that mean? Market makers are going to have to cover, and it's Friday. Look at how far down we've been since actually February 29th. The market has a lot of short covering to do and then rolling over. So we had good CPI. Tariff talks are still in play. The government doesn't look like it's going to shut down, but frankly, that's not really news. But now we have FOMC. Does Powell signal a cut? I think he does. Does he cut this time? I'm not so sure. I think he wants to see more consistent, right? Because the CPI report, the February one was high. But we'll give you the next one for trade idea. If you want to be part of our Discord, comment Discord below. It's an invite-only Discord where we trade all this intel with Congress. But level to level, if you went long with our idea yesterday, it's Friday. Don't overtrade. Just start scaling out. Take the win. If we break under 55.31 again and turn it into resistance, remember that there's a line right under at 52.62. Nothing goes in a straight line, but we suspect that we're going to squeeze into the next CPI, which is April 2nd, right? And then roll over immediately because, you know, the April 2nd is also the tariff talk. We're not bottoming till April 29th. I suspect we're going to retest that 52.62 and maybe even lower, even 5,000 before the president starts hearing from his constituents that they're losing real money. $5 trillion have been wiped out of the market. That's real 401ks, that's real IRAs, that's real pensions. And a lot of people in the executive who are millionaires don't realize that the common folk use their pensions, 401ks, to buy homes. You borrow against it because your employer will let you, collectively pay it back. So if you're down 10%, your borrowing power is diminished. Now, on a trader standpoint, for those of you who think short term, this line right here was about 510 overnight. It held. Our target is already hitting. Overnight was 55.68, all the way up to 55.98, maybe 6,003. So I think we're going to get a little bit of overbought, a little short covering today. If we break above that green trend line, we're going higher. If not, I don't know if you can see the red trend line that we have there. If that can come out to be support. Again, 55.31 keeps holding. We keep going up. 55.31 fails. We're immediately going to go to 5,000 first. And like I said, we're going to roll over, which again, we're going to roll over regardless. It's just a matter of, do we roll over now? Do we roll over FOMC, or does it come in by April 29th? But again, it's Friday. Don't overtrade. If you're green, stay green. If you're not, take a quick trade. You do not want to go long and hard over a weekend with all the headlines coming out. It's not worth the capital. It's not worth your money. We're not going to go into a stretch for at least 2026. That's just the way markets work. The market is letting us know they're not happy with the beginnings of the economic news. So it's downside. And then in midterms, when we get split government, like I said, mark my words, we're going to start skyrocketing from 2026 to 2028. Markets like to know what's coming, and they like split government because they literally will know what's coming with split government. But again, we should be in a bear market after Q4. We're definitely going up in the summer. Summer's not bearish. But stay tuned, and we'll see you on Monday.